Hi, I'm Michael Elliott. I'm the Campgrounds CPA with Camp and Park Accounting. Here today with question number 5 in our Ask the Campgrounds CPA questions series, where we take a variety of questions that we hear throughout the week. We put together a video to try to answer those questions to provide some insight in the financial, accounting, tax issues as they relate exclusively to campgrounds and RV parks. So today's question is one that I've been asked several times, and it relates to SBA loans. So today, as I record this, is June 5th, 2020, and we're sort of in the middle of this pandemic season here in the United States. And so a lot of our parks a few months back, March, early April, primarily in March, applied for some SBA funding in order to get some liquidity for their businesses to be able to continue operating in the spring and the summer in the event that the year turned out worse than they were anticipating, which was the case for a lot of parks. And we're starting to hear that finally, 2 to 3 months later, the SBA is finally working through their backlog of loan applications and is starting to give some funding. Now, for most parks, this funding is likely to be limited to $150,000 in loan funding, and this is indeed a loan that we're talking about. And this loan is going to be repaid over a period of time at a fairly low interest rate in the 4 to 4.5% range. And the question we're being asked is this by park owners. Park owners are saying, Michael, when we applied for that loan, everything was unknown with this pandemic. We didn't know if we were going to open, when we were going to be able to open, if the world was ending. We didn't know any of this. Well, now most of their parks are open, right? In the U.S., the vast majority of campgrounds and RV parks are open. A lot of your states are opening up. A lot of the states don't have 14-day mandatory quarantines, although some still do. And so for a lot of parks are starting to get occupancy that's a lot closer to normal. Not all are, right? Not all parks are at this point, but a lot of them are. And a lot of them that are have scaled their expenses way back. And so what they're discovering now is they actually have some liquidity, right? Some operating cash flow with which they can use to operate their business. And so the question is, now that SBA comes knocking and saying, hey, look, I got $150K, you want it? They're stuck with the decision. Do we take the money? Do we not take the money? And, I can see both sides of the argument. On one hand, we say, why would we take money and borrow it even at 4 to 4.5%, right? Why would I borrow that money if I don't really need it? And the other argument is, hey, we should take the money just because. I tend to lean towards the argument which would say that, hey, look, this pandemic sprung up on us super quickly, right? In almost a 30-day period of time, we went from normal to shutdown. We don't know what the fall holds. While, some people think there's going to be a second wave, some don't. We have no idea at this point. And so if I'm a park owner, I'm likely going to recommend at this point in time that you obtain as many sources of liquidity as you possibly can, so that in the event something else crazy happens, right? In the event that your state goes on lockdown, something crazy happens to your business, you've got an additional pool of money that you can draw on to maybe help keep you in business. For some of you, maybe your operating cash flow is in the summer is simply not going to be enough because you've already lost 2 months of your season, and therefore you need you're going to need some money in the winter. There's a lot of different options out there right now and a lot of different trains of thought. What I would say is this, that for the vast majority of campgrounds and RV parks, I think that taking the loan, if it's $150,000 or some less dollar amount, I think that taking the loan today is smart because I think it's a relatively inexpensive insurance against the potential for a downfall later on. What we know about the SBA loans is this. There shouldn't be any application fees. There shouldn't be any origination fees, meaning they should deposit the money, nothing out of pocket for you. There shouldn't be any prepayment penalties, meaning you can turn around and hand the money back to them later. So if I'm a park owner today and I'm questioning whether or not I'm going to have enough money come the fall or the winter, or if I'm a park owner today going, hey, I think I'm going to be all right, but I'm scared about what the pandemic may mean for 6 or 9 months down the road, I'm advising you, I would take the money. I would strongly consider taking that money as an insurance policy against things that you don't know. Even if it's at 4.5%, if you borrow it for 6 months, $150,000, you're talking about a couple $1,000s potentially, right, in interest. If you get 6, 9, 12 months down the road, you don't need the money, simply repay it. Simply repay it. The interest that you would have paid for a year, while it will have been lost money, in my opinion, is an incredibly valuable insurance policy against bad things that can happen. And so if you're comfortable with taking that risk of $3,000 or $4,000 in interest, right? If you're comfortable taking that risk, go ahead and take the money if it's offered to you. I don't really see a lot of downsides. Now, I don't recommend taking the money and then spending it willy-nilly on whatever on some improvement that you otherwise wouldn't be doing. I don't necessarily recommend that. But I do recommend having that money in the bank, set it aside, that in the event your season doesn't turn out like you think it should, in the event of a second wave, in the event of who knows, we have additional sources of liquidity. Because I think that if you went to a bank today to try to obtain a $150,000 loan, I think it's going to be pretty difficult with their underwriting because they know your businesses have heard. I think if you go to try to extend your line of credit for another $150,000, I think it's going to be hard. I think if you try to go get outside investments, I think it's going to be hard. Right? I don't want you to cash out retirement and things like that. I would rather have this $150,000 in the bank to know that it's there. That's my advice on where it stands today. Again, it's June 5th, 2020. Things could change as we find out more about what the SBA is attaching to these loans and things like that. It could change, but at this point, I think it's worth looking into. So again, this has been question 5 in the Ask the Campground CPA question series. If you have any questions you'd like to ask us on accounting, finance, as it relates to your campground, your RV park, maybe it's buying a park, selling a park, expanding your park, whatever it is, shoot me an email, michael@campandparkaccounting.com, or just go to Camp and Park Accounting, fill out the Contact Us form, shoot that question over to me, and I will be happy to answer it on an upcoming episode. Hope you all have a great, great day.